Hello and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about the next, let's say 30 minutes here. Every time I'm saying 20 minutes, it seems we always end up going long. The markets are resilient once again. Another round of rough news as far as the economy is concerned. The VIX did spike a little higher, and it's at least now showing a little bit more uncertainty. It's trading right now at 23.96. Let's call it $24 at this point in time. So we did get a spike up, and it's kind of drawn back. But once again, we got up markets, and the VIX is just still meandering a little bit lower. It's the uncertainty is still in the marketplace, but the markets don't seem to want to really come down. Right now, we got mixed markets. We're showing the S&P 500 index is up, where we got the Russell 2000 index down. We got the IWM down, or the Russell 2000 index down, and we got the NASDAQ down a little bit too, as far as the markets are concerned. So our position is strong in the SPY trade. I wanted to say SPX, but the SPY trade that we put together last week, we're up a little bit on that trade. So I got it set up in the what if calculator. Let's grab this trade and send it to the ticket, and let's just take a quick peek at it now. And I just want to talk a little bit about the setup of the trade. So we put the trade on for $5.25 on, well, what day that was, on Wednesday now. And I've jumped on a plane, and I'm in northern Wisconsin at this point in time. But since then, so right now it's trading for $5.25, and we see the market at $7. So market was down a little bit more. If you do get this opportunity, if you put this together and you see that the maximum that it could trade for is $20. So if we get north of $10, if we get a double on this trade, we're going to get out. If you want to ride it, you always do your parameters. But if I can sell this thing for more than $10, I'm going to consider, especially if I had more than one spread on, I would consider taking one off and maybe letting one run in this instance. For some reason, the markets want to go up, and I've mentioned it many times, and I actually read some things this morning that kind of back my thoughts, in that the AI boom and all the money that's going into AI is what's keeping the markets afloat. It's basically like the COVID bump that we got when the government decided to give money to everybody, just as long as you applied for it, and they gave it to business owners, and hence the market started running. And then we had home sales booming. We had all this stuff happening at the same time. Now that person is no longer the government. It's just AI in general. There's deals going on left and right. Banks had really good numbers. Today it came out that some of the regional banks have had some shaky numbers as far as, and there's, worries or concerns about maybe some of the regional banks not making it. But, that happens. That happens from time to time. And in a weird way, sometimes it's good to have some banks fail, because it kind of wakes you up a little bit in the marketplace, and realize that not everything is all glory as far as financials are concerned. But obviously all the deal making stocks, Goldman, volatile, had a real strong up move. Some people took some profits, but now we're going solid again with all of the financials, especially the big banks. Citigroup doing well, Goldman doing well, JP Morgan doing well. Wells Fargo actually came out, and they've had their best quarter in a real long time. So that stock's finally got some momentum behind it. Okay, now on the bearish side of things, I still think there's more downside movement. And we put the SPY trade on. We put it on for $5.25. It's now trading for $7. But I just want to talk a little bit about the setup on this trade. Now, and here, especially if I'm looking at an SPY trade, if I'm looking at something in an index, I want to get way out of the money on the put that I sold. Now, I talked a lot about the volatility skew on Wednesday, just saying that we can get something for this 650 put that I'm got my cursor on right now, because I want to be far enough out of the money that time decay can happen, and a pumped up implied volatility, if the market starts going down, it's not going to affect the 650 as much. Now, if it gets all the way down to 650, well, that's awesome. That's awesome because our negative delta on the trade is going to take over. But I want that option contract to wither away. So I err on my long put spreads, in particular in a bearish market like this, by going too far out of the money. That also gives you an opportunity to roll. If I wanted to, we could buy to close the 650 and we could sell to open the 660. And we're far enough away that we could take some profits and potentially make some more profits on the trade. So that is the setup, and that's the rationale that's behind it. We're going out until Halloween. 10/31 is that expiration. So we got time on this trade. But I don't want to go beyond this, because if the markets can't go down with everything that's going on with the government being shut down and potential trade war with China, as actually many people already say that we are in a trade war with China at this point in time. So I guess you say tomato, I say tomato kind of thing going on. But with all that right now, we're up a little bit on our trade. I think it was the timing was good. And then we finally saw a pullback in gold. So I'm going to lean bearish on gold. I've been waiting for this to go back to another long trade in gold. And I'm going to put this one on, this butterfly, right alongside everybody here on Options Guy TV. And I'm going to get bearish on gold. So we also had good news in our VIX trade. So we've been doing well with our trades here on the show. Even though we're trading 3 days a week, we're doing all right. Here's the VIX situation. All right, I'm showing it. You're seeing it on my screen. If you have any questions, by the way, please do put them in the chat box. And good morning to you, Kurt. By the way, I note that you're out there. Appreciate it. Kurt keeps me honest. He keeps all my expiration dates straight, because I get confused sometimes what I do on some shows. But in this instance, I got all my trades. I verified them by going in and I double checked. But we have this VIX trade that we actually just kind of slapped on the 13th, which was a Monday. And it was to go along with a VIX trade that we had already done, that had already been profitable, that we put on at the beginning of the month of October. And this trade is also doing well. And it's almost time to get out of it. There could be some upside, but here's the thing. We're on the right side of the equation. So here's where we are on the VIX. So the VIX actually right now, the actual VIX index, I lost my quote. Oh, it's at around 24. I just said that at the top of the show. It's at around 24. And actually, this is pretty close. This is the futures contract that's showing the VIX in general. And if we look at this and we scroll out, let's go look at the VIX trade. Let's send this one to ticket. And let's figure out. So we're on the 22nd, which is right around the corner. The VIX always expire on a Wednesday. That the normal monthlies do. Remember, we always avoid the weeklies. But this is the normal monthly VIX index expiration, which is the 22nd. And this is gold. This should be VIX, but that's the one that we trade. 22nd, right here. We avoid the weeklies. I was looking for the W and I didn't see it, but we don't want to trade those. So this is the nearest expiration, and it's the 22nd. And the VIX is at 24, but let's see where the future is at, right? So we want to do put call parity. We scroll on down and we see, wow, the future's actually up quite a bit. So it looks like it's at 23.5, almost exactly. And I say that because the ask price of the put is 170. I guess if we look at the ask price of the call, it's 190. So it's it's almost where the current market is at 24. So the futures contract, wow, and that's holding strong. What I expected with the VIX, I'm befuddled by this. I didn't go in and figure out where the future was at right now, but what I expected was the actual future contract to be around 21 or 22, saying that we'll see the market sell off a little bit before we see the VIX sell off and the market stabilize a little bit before we get to the October 22nd. But So I think people are finally, by looking at the VIX and the fact that it's at that level, I think people are finally saying, well, the government may be shut down for a little bit longer than we think. And that's what this says to me. But our trade gets profitable above 21. Its max profitability would be at 20. And that's $2. But right now we're making $1 on the trade. We put it together for 60 cents. And not quite. It's $1.10. So we got a double on the trade. I was thinking wrong. So we put it on for 60 cents and we could sell it for 110 right now at the midpoint. Now, what I meant by we're on the right side of the trade, if we go back and we look at the what if calculator, we're trading up here. And if it comes down and it lands in the middle of our trade there, this could trade for as much as $2. It's up here, and the most that it can trade for was about right now, 110. So you can take the risk of the market coming down to try to make, an extra, it would sell for $2. So if you hit it right on the noggin, right on the 20 strike, you'd make $1.40. I don't think it's worth it. I think you get out of the trade at this point and you close this trade. It wasn't as good of a trade as the first one that we did at the beginning of the month, but it still was a good trade, obviously. What's up? All right. Anybody put this one on? Anybody have this position on? And that's the VIX. So we did the long put, we did the VIX. Let's do the gold trade. We're going to go 1 week out in gold. Gold's got many different expirations. Let's send this one to ticket. We're going to get bearish on gold. 150. Oh, the market's going down already. Dang it. Now I got to adjust it. That moved way too much. We want to sell the at the money, so we got to go down 2 more points. So this trade needs to get adjusted. All right, we sent it to the ticket. Let's go to the trading page. Okay, this is going to be the official paper trade. We're going to go back to the well with gold. We've done really well with the gold trade along the way. You have the VIX on. Okay, awesome. I'd take it off. I think if it's the exact strikes that we did, if you didn't go any wider, I would take it off. And I hope you didn't take the IWM trade off, even though you probably should take it off. But the market's finally starting to lean on the small caps a little bit. 397. Okay, so gold, we want to do. They got dailies in gold, and we want to do the 24th. Which is this day. This is where we're at. We want to adjust this down. We're going to go 5 points and 2 points, okay? So let's clear it out. 395 is the ask. 390 is the bid. 1, 2, and then 2 points, 388 buy. Okay, 180. That's not bad at all. And we can make $3, okay? Or we could sell it for $3. So let's send this one to the what if calculator. So below 388, we could sell this for $3. We pay 180 for it. The maximum we can make from this point on down is 122. So the difference between this strike, 395 and 390 is $5. The difference between this strike and this strike is $2. So 5 minus 2 is 3. We paid 180 for it, and we'll call it 180. Let's put it right at 180. Boom. There we go. That's going to be our trade point. And so 5, what did I say? 3 minus 180 is 120. And this says 122.50. So it's very close to it. When it came in, I don't know what price it took it at. And then the more interesting thing to me on this trade, and I'll zoom down here a little bit, give you a little bit better view of the profit and loss on this. Remember, gold is right here, 393, but the break even on the trade would be 395 minus 180. So the break even is 393.20. 393.20. So we're right at break even right now. So the market either needs to just, if it stays here, we're at break even. If the market drifts down, we could potentially get a home run on the trade, just on the trade right there. And then if it goes anywhere lower, then we're looking to make about $1.22 on the trade, or $1.20 if we get it done for 180. I like it. I like it. And if you look at the gold chart, I mean, it's parabolic, right? And we're getting really extended. So yeah, I'll just leave the big chart up here because I do think that this is, so you see how well it tracks on the way up, the moving averages, the 20-day, and I think it matters in gold. I think there's underlyings that I think moving averages mean more on. I always have them on, but I think that there are different underlyings that that it matters. So you're intermingling the 20-day and the 50-day, and it's just riding that line all the way up. And the 200-day is, staying in check down below, sign of a real strong market. The 200, then the 50, and then the 20. That's a sign of a good, strong market. But now look at how extended we're getting relative to the 200-day. The 200-day on gold on GLD is all the way down around 300. And this was parabolic all the way up to the 400 level. And we're finally seeing some people that have taken off a little bit of profit on the trade. So I'm going to lean bearish. I kind of wanted to see what happened around the 4,000 level, and it's still hanging there. 4,000, I really thought the market would stop, but it didn't. So I think the timing's right. Let's get a little bearish on gold. We're neutral to bearish. If the market stays where we're at, we're fine. If it continues on down, we're better. If it continues on up, we got at max risk at 180. $180 per 1x2x1 open wing put butterfly to the downside. And that's where we're at. Oh, good. You're still in IWM. Awesome. Yeah, it's tough. I mean, if we look at the IWM trade, Kurt, and you just look at the chart, but no, IWM, and I've always mentioned this, is it's a wild beast. You can have stocks in the index go bankrupt in a week, right? Because you've got all the small caps, so it's obviously very volatile. But at this level, we came back down, and there's just so much noise right here. Still don't even mind just getting long a long spread going, or getting long a straddle. Still think that that's a viable trade, but it wouldn't have worked out when we first talked about it so far. But we had the down day, so we were profitable there, came back up, and we broke above this trading range. This is the I guess that was a doji right there, huh? Yeah, this is a doji right here that kind of was scary in that we went up to that level and we actually broke out to the upside, but it didn't last long. And now we're right back in it. Obviously, I wouldn't want to be in this trade if the government opened up, right? I'd think that would give it to pop to bring it back to this level. That's the thing that scares me about that trade. All right, so VIX, are there any other trades that we may have on out there? Is there anybody out there that would like me to review anything else that we've done? Because we've got a few minutes here. We're 20 minutes into the show. If you have any, please do put them in the chat box. If not, I'm just going to leave you with the gold trade. We still got a lot of banks coming out. Most of them are the regional banks, and the regionals aren't doing quite as well. A little bit of a drag on the market. Everything in AI is still going strong. Everything in the deal-making banks is still doing well. Oh, you want to look at UNH? Okay, we can look at UNH. $380. We're at 352. Any thoughts on the direction of the VIX? Yeah, Doug. You know what I'll probably end up doing here? Okay, let's do both of these. Let me look at the chart for Kurt's question on UNH. Go ahead and put that one out there. Go ahead and toss that one on. There we go. That's the VIX one. Did we already toss the UNH one out? We're going to look at UNH. So this is at the heart of the conversation between the government shutdown and where we are at. Okay, we got the 20-day providing a little bit of support here. 377 right at the top of the channel. Yeah, to me, it's just in a period of consolidation. I mean, I can totally see why we're just hanging out. We got 1, 2, 3, 4 candles, little bit of a down day when the government shut down because the main topic or the main concern is the Affordable Care Act and the funding of it. And that this marketplace doesn't like change. And if they get change, and if something does happen to the Affordable Care Act, I do think that there's some bearish downside. But right now, it's just in a period of chop. But I mean, longer term, it's fine. What do we have on? Do we have a long call spread? Is that what we have on? Is that what we talked about, Kurt? Or did we have a put or a call butterfly? And then I'll get into the direction of the VIX. All right. I think the VIX will ultimately have to come down. So if I look at the VIX, let's pull it up again. And let's look at the futures in November and figure out where they're at. So the futures in November, this could be a trade candidate if it's up in the 20s. Let's see, where do we swap over? We got the 250 to 350. We're in the VIX in November, 33 days away, $3, 270. I guess it's right here. 3 and 3. Yeah, we're right around 22. I'd call it $22 is about where the VIX futures are at. It's somewhere between 22 and 22.50. So you could see getting bearish in that. I actually don't mind doing that right now when I look at it, because it's, once again, you don't have to worry about the spike up. So if you put this trade on in November and the VIX spikes to 30 tomorrow, well, you just have to wait. You got 33 days, right? It's not going to stay. Well, never say never, because during COVID times, it stayed in the 30 range for quite some time. But in this era where this is at, it's the government shutdown. I mean, there's never, but yeah, I don't. The futures are right here. Let's see what happens if we buy a put and the market comes down. Market goes up. The VIX is going to come down. Volatility is going to come down. That's going to be a tough one. I guess I would do a put spread, but maybe we sell a call spread. Let's see. You got to go pretty wide on them, though. The skew is really bad on the call side of things. 30 is 180. How far do we? Yeah, we got to go all the way up. If we go to 35, we're only bringing in 30 cents. That's a little tough. Here's what I would do. Let's do you guys want to put this trade on? Want to do the VIX bearish? Long. Oh, a long call in UNH. If I had a long call on, Kurt, in UNH, I would sell something at the top of the channel, just above the channel. I would sell some premium. You can get a lot of premium because of the underlying, just even on one call option. I would roll that in at this point in time. I would roll it into a long call spread. I would totally, yeah, that's the way I would adjust that trade. Did we put up the Kurt's long a call? All right. Then you guys want to do the VIX trade? You want to get bearish in the VIX? I mean, I think the VIX will, I think we'll have another spike. I don't think the news cycle is done yet. So if I was long a call in the VIX and the VIX spiked again to, let's say it spiked up to 30, I would take that opportunity to get out of that trade. But I do think that the VIX has to come down by the time we get to November. And betting that it would be below 20, I think is fine. I don't mind that trade at all. So the way that I would approach it is we can do a 23 is 375 and sell the 19. Yeah, that's not a bad skew there. All right, so this would be, we'll make this a paper trade. I'll grab the screenshot and we'll follow it, and I'll sell the 19. Buy that, sell that. Let's see where we're at there. 250, and we're 4 points wide. It's not great, but you're not going to get great in the VIX because it's a mean reverting index. So you're paying 250 to make 150. The skew isn't your friend. Okay, let's look at going more at the money. Let's go 20. Let's buy the 22. And if we do this, can we get 50-50 on this one? Let's try selling this. $4. Yeah, that's not too bad. I like that one better. So we're $3, $180. I would love to pay $150 for this. I mean, that's the number, but let's put it, if this was a normal underlying, the way that I set this up, I would expect to have a 50-50 bet on, and that I paid $150 to make 3. But here we're paying $180 with the potential to make 3. I don't mind that. That's going to be the official paper trade. I'll screenshot it. Let's send it to What If Calculator so I don't forget to screenshot it. And we'll follow this. We got 33 days now for the VIX to go below 20 and settle in down there. VIX right now is 22.5 on the futures. We'll have to make note of that, right? 22.5. The call is 380. And the put is 2. Geez, where is this at? 22. No, it's about 22. Oh, I'm looking at the wrong one. That's 20. It's 22. So I'm right. In that this is 325 and this is 3. So yeah, the call's a little bit more than the put, implying that it's somewhere between 22 and 22.5. So we're buying an at the money VIX option and we're selling just out of the money at the 19, implying that we want the market to go below 19 by the November 19th expiration, 33 days away. I like that trade. Not quite the one-to-one, the perfect, if the skew was awesome, we could maybe get that done for more of a 50-50 trade. We currently have the VIX at 24. The actual VIX index is around 24. Yeah, I don't mind getting short this at all. Yeah, the call skew is just, call spreads make sense. Like you're thinking, oh, I want to get time decay, I want to get this, but the VIX skew on the call side of things makes it really hard to do a short call spread. It's like, if you think about it, that's the trade I want to do. Just saying that the VIX will be below 22 or something like that. But it's just hard to get that trade on. For like a decent price at that point in time. All right. Do you like this trade, Doug? If I'm going to do something in October, I think we could maybe do an at the money VIX butterfly. Like that wouldn't be bad either. So, all right. Well, that's it, everyone. We're at 10:30. We filled it. So, Well, I don't like to always say this because it gets used too much, I think, but I think the timing's right. Stay safe out there. Well, if you're in a long position, Doug, yeah, if you get another spike up, get out, get out. Yeah, get out. I just do think that there's going to be another spike, but don't. Okay, my attitude, and put these phrases out here. I was just about ready to close off, so put Doug's two last comments out, please. Yes, and I don't mind being long the position right now. But here's the thing about the VIX is you don't wait on the VIX. You don't wait in that you get a spike in the VIX and you got a long call option. Get out. Get out because two things happen. You get the VVIX, the VIX of the VIX also will spike on a downturn in the market. And there's always a possibility that the market just doesn't go up and the VIX comes off, right? And it's really hard to judge that. It's really hard to judge when the VIX might go back to the mean. Now, it's the only underlying that I can think of off the top of my head that always reverts back to the mean, right? It might take a year, like in COVID times or whatever, to get back below the 20 level, but it eventually gets there, right? It's not Nvidia that's going to, trying to go on to infinity to the upside. It's going to revert to the mean. So when you get a profit, you're long a call option and you get that opportunity, get out. And that's part of the reason why on the long side, I like to just buy a call. Now, I don't mind if the market moves up and you leg into a long call spread. Like I'm long the call, the market spiked, the VIX hits 30, and then I sell a call. And I, let that thing ride until that expiration. I don't mind that. But when those opportunities happen, you need to do something in the VIX. In other words, this recent spike up above 25, something should have happened. Doug, like either you should got out of it or you should have sold some premium against it. And definitely if that happens and you get to the end of the day, right? You don't want the overnight to affect it because the VIX is so fickle. All right, and then we'll add. It looks like Kurt filled the gold trade. All right, I'll join you on that one, Kurt. And nice. So Doug did exactly what we're talking about. I've been overselling the last couple of days. That's perfect. That's perfect. That's what you should be doing. I'm taking that you're selling calls. Yeah. All right. So my short-term look on the VIX, if I was thinking of the path of least resistance, and once again, there's no real way to determine what's going to happen in the government shutdown. But I think the VIX will go higher, but I do think by November that it will be, we're talking quite a bit. You're going to get into the holiday, Thanksgiving. You're going to get into the holiday buying season, 33 days away. Yeah, I like that November trade right now. And we're getting almost, 180 to make 120. That's not too bad. It's not too bad at all. All right, everyone, that's it. On Monday, I will be traveling one more time, but we'll be back Monday, 11 a.m. Eastern time for the next edition of Options Guy TV. Please share with your friends, family. Give us a thumbs up on whatever you're watching it on. And if you haven't done so, go to the hub.tradier.com, support the show. It's free to sign up. You get access to all of the great speakers that Tradier has put together, and hope to see you in the hub.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.